What in the heck happened today? The market's selling off. Why? Well, this morning we had some jobs data that come in and didn't look so bad, but then we got the Challenger report. How many layoffs are expected or were shown in January? Whew, that's what the market saw, but this didn't do very well. But like I always say, when there's bad news in the economy, usually these things will do pretty good. So we had mortgage rates drop a little bit today. So if you're watching this video, you might be a homeowner thinking, okay, maybe I can refinance, or you might be a home buyer thinking, okay, with these rates, maybe I can buy a house now. Well, folks, my name is Dan Frio. I'm the host of the Rate Update, and I'm also a loan officer licensed in all 50 states. My goal today is to help explain to you guys what in the heck happened to those today and why. So here's what happened. Stock market, it just started crumbling from the get-go. And I was like sitting there thinking, okay, the jobs market that we had this morning, or the jobs data, it didn't look all that bad. If you go to here's Thursday's data. We got initial jobless claims, a little bit higher than expected, but nothing huge. Then we had continued jobless claims, and it was right in line. And then we had the JOLT index, and this is basically confirming there's low hire, low fire. But then shortly after that, we get the Challenger report, and this wasn't good news. If you scroll down through here, what you're seeing right through here is planned layoffs soar 205% to 108,000 last month. So now they're like, okay, now this might be bad news for the economy once again, but bad news for the economy is bad news for stocks, bonds, and crypto. I'll take out the bond market, because let's go over to the bond market, see how this reacts to this news. So usually bad news in the economy is good for these things over here. What you're seeing right through here, these are mortgage bonds that we follow. So if you're looking at a conventional loan, there's your bond. If you're looking at a Fannie Mae or an FHA or VA or USDA loan, well, that's the bond you're looking at. But here's how you read both of those. Those are both up pretty big today. As long as the price of these bonds are going up, that means rates are coming down. And that's why you're seeing right over through here, rates coming down just a little bit today. And like I always say, these come down gradually, but when they go up fast. So try to take advantage of these. See if these help you out if you're a homeowner. And if you are a homeowner, go to our website and plug in your mortgage information right up through there. This is a tool we created for homeowners. Plug in your mortgage information and then let us know at what interest rate you'd like to refinance, or how much of a monthly savings would you like. And when either of those hit, I'll call you, I'll text you, I'll email you, make sure we go over the numbers. What's my new payment? What would my cost be? And what's my break-even point? If it's under a year, probably a good idea. But that's what we're seeing in the markets right here. It's good news for the bond market. So up through here, when you're seeing those little bubbles, those means banks are actually coming out with lower interest rates today. So rates are coming down just a little bit. Stock market is taking it on the chin. Even Bitcoin